Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Chile's copper output fell in June for the first time since the coronavirus pandemic landed in the world's top producer of the red metal, dropping 0.6% to 472,172 tons, according to data released on Friday by government statistics agency INE. The South American nation's manufacturing output, meanwhile, plunged 8.3% in June, the agency said, as the peak of contagions in the South American nation hammered its economy.
Moving on to the top news in the energy sector.
U.S. crude oil production plummeted in May, falling a record 2 million barrels per day to 10 million barrels of oil per day, the U.S. Energy Information Administration said in a monthly report on Friday. The drop, the sharpest monthly decline on record according to data going back to 2005, came after a price crash this spring due to oversupply and reduced demand owing to the novel coronavirus. Top crude producer state Texas cut production by 764,000 barrels of oil per day while North Dakota's output fell by 353,000 barrels of oil per day in the month. Offshore drilling in the U.S. Gulf of Mexico fell by 300,000 barrels of oil per day, the report said. Gasoline demand was down 23.5% from year-ago levels at 7.2 million barrels of oil per day. Demand for diesel and other distillate fuels fell 12.6% from a year earlier to 3.5 million barrels of oil per day.
We will now look at the top news in the agricultural sector.
The Brazilian wheat crop has the potential to surpass 7 million tons this year and reach a record, provided the weather remains favorable throughout the cycle that has just begun, according to analysts interviewed by Reuters. An expected rise in investment from Brazilian farmers who had a profitable soybean season in the summer and can divert funds into wheat, driving yields higher, will also boost production, they said. With wheat planting complete in southern states including Paraná and Rio Grande do Sul, and harvesting to begin around August, a survey by consultancy Trigo and Farinius predicts national wheat production may reach 7.34 million tons this year. The forecast is just over 1 million ton above the government's projection of 6.31 million tons. In 2019, Brazil harvested 5.15 million tons, as farmers faced adverse climate conditions.
Next we have agricultural price news.
U.S. soybean futures rose on Friday for a second session as soy oil futures climbed nearly 2% on demand from the soy-based biodiesel fuel sector, traders said. Corn futures ended fractionally higher while wheat futures firmed on end-of-month position squaring. Chicago Board of Trade November soybeans settled up 4.25 cents Friday at $8.92 minus 1/2 per bushel. The contract rose about 1% for the month. CBOT December corn settled up 1/4 cent at $3.27 a bushel and September wheat ended up 1.75 cents at $5.31 minus 1/4 a bushel. Soybeans got a lift from monthly U.S. Energy Information Administration data showing that the amount of soy oil used for biodiesel in May rose to 778 million pounds, up from 672 million a month earlier.
Raw sugar futures on ice climbed to a 4-1/2 month high on Friday, supported by a diminishing outlook for production in Thailand and gains in many other dollar-denominated commodity markets driven partly by the weakness of the U.S. currency. The dollar extended its dramatic fall on Friday, putting it on course for its biggest monthly drop in a decade. October raw sugar settled up 0.53 cents, or 4.4%, at 12.64 cents per pound, the highest since March 10. September Arabica coffee settled up 3.6 cents, or 3.1%, at $1.1895 per pound, the highest price in 3.5 months. September Robusta coffee settled up $4, or 0.3%, at $1,344 a ton. December London cocoa settled up £21, or 1.3%, to £1,638 per ton, its highest settlement since June 29.
We will now take a look at energy price moves.
Oil prices rose on Friday and were on track for monthly gains, benefiting from news that U.S. oil output cuts in May were the largest on record. Brent crude settled up 37 cents, or 0.9%, at $43.31 a barrel. U.S. crude was up 35 cents, or 0.9%, at $40.27, after dropping 3.3% in the previous session, also off lows not seen since July 10. Brent crude posted a fourth month of gains, and U.S. crude posted a third, as both rise from depths hit in April, when much of the world was in lockdown due to the coronavirus pandemic.
Moving on to metal price moves.
Copper prices dipped on Friday as speculators locked in profits after July recorded a fourth straight month of gains for the metal amid a recovery in top consumer China. Computer-driven trading funds have dominated activity recently, creating volatility, said Alistair Munro at broker Morex Spectron. Benchmark copper on the London Metal Exchange was down 0.3% at $6,413 a ton at 1600 GMT, giving up earlier gains and extending its decline from Thursday. Copper was still on course, however, for a 6.6% gain in July, having risen every month since April amid a China-led recovery in demand following the coronavirus outbreak. LME aluminium shed 0.4% to $1,712.50 a ton, but was set for a near 6% jump in July, which would be its biggest monthly rise since April 2018. Zinc climbed to a 6-month peak of $2,334 and was headed for a monthly gain of 13%, the most since September 2012. It was last up 1.5% at $2,321. Nickel rose 0.4% to $13,780, lead gained 0.2% to $1,876, and tin added 0.3% to $17,865.
Dalian iron ore futures were set to gain for a fifth month, rising on Friday as China's accelerating factory activity boosted sentiment already up on signals of more government support to keep economic recovery on track. The Dalian Commodity Exchange's most traded iron ore contract rose 0.5% to 843 yuan, $120.71, a ton in morning trade, advancing for a fourth straight session and on track for a fourth weekly gain in a row. The commodity has defied expectations for weak steel demand in July, receding supply risks and rising Chinese port stockpiles, with the Dalian futures set to gain for a fifth straight month while spot prices remain above $100 a ton for 2 months now.
Next we have the most recent news on the financial market.
The dollar rose against a basket of currencies on Friday as investors covered shorts and took profits after the biggest monthly decline in the currency in a decade. The dollar index was down 4.1% for July, its biggest monthly percentage fall since September 2010, with most of the drop coming in the last 10 days as new coronavirus cases surged across several U.S. states and some recent data pointed to an economic recovery losing steam. On Friday, the dollar mostly held gains after data showed U.S. inflation-adjusted consumer spending has pulled out of April's deep hole but remains below its pre-pandemic level, and the currency strengthened as the session wore on. After sliding as low as 92.539 earlier, the lowest since May 2018, the dollar index was last up 0.6% at 93.377. The euro was at $1.1786, down 0.51% on the day. Against the Japanese yen, the dollar earlier hit a 4-1/2 month low but last stood at 105.77, up 1%.
Finally, we have update on key economic events that will take place in the coming week.
On Tuesday, August 4th, we have Japan July CPI for overall Tokyo and France budget balance. On Wednesday, August 5th, Japan July Services PMI and UK July Reserve Assets total will be published. On Thursday, August 6th, German June manufacturing output, UK July all-sector PMI, Bank of England MPC decision, minutes and monetary policy report will be announced. Lastly, on Friday, August 7th, Japan June leading indicator, German June industrial output and German June trade balance will be announced.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.